Hello, traders. This is Blake Morrow. You are listening to the Daily Roundup. How are you guys doing? Everybody good? Just making sure everybody knows that we're starting right now. Give me 1 second. So it looks like we got a little bit of a consolidation here. However, I must say, let's see, let's get that start. Hold on just 1 second. I just wanted to say that even though it looks like we have a consolidation, notice how heavy like the euro is trading, the Aussie, the key. Let me just forget that. Just notice how well the dollar is trading. The dollar is trading really well bid. And so I'm going to draw up something here, and I'm going to give you guys kind of like my thought process on the next 24 or 48 hours, right? And remember, there's going to be, and I'm just going to talk about the dollar in general. This is probably what we're dealing with as far as the dollar goes. Now, one of you guys or gals, tell me this. Why is the upper end of this wedge important? This blue line. Why is that blue line important? This one, the upper end of this wedge. Somebody tell me. Ready? 1, 2, 3, go. 1, 2, 3, go. 1, 2, 3, go. Any of it? Why is that wedge top so important? Lorraine said, because the top is blue. Because it's blue. It's like one of my favorite movies, Liar, Liar. I mean, it's so funny. My favorite Jim Carrey movies. So Gavin says, ton of stops up there, and that's a breakout point. Raj says, because it's a triangle. Hugo says it's September 20 resistance. No, all wrong. Come on, somebody's got the answer here. Somebody's got the answer. Sorry, I got something in my eyes, and it's not just an eyeball. Martin says 200 period weekly moving average. Is it? Is it? By golly, it's close. It is. It's really close. That wasn't what I was looking at, but that's a good eye. Jason said former resistance. Yeah, former support, former resistance, current resistance, 200 period moving average. That really wasn't, those weren't the answers I was looking for. It's the 38% retracement. It's the big 38, the big 38. It's the 38% retracement. And you know why that's so important? It's right there, 94.50. Raj says, I had the right answer, but your finger movement confused me, just threw me off. Jason said, scroll up. Oh. Jason said, yes, Jason, you got it right. Bingo, Jay. Good job. Good job. Good job. Good job. Good job. Good job. But Hugo says that too is what I said. Yeah, right. No, anyway, the reason why that's such a big deal, you guys know, if you clear the 38% retracement, the chances of a continuation become a lot less, right? Let me draw that out for you really quick. Just you guys know all this mostly, but let's just you know, I don't use Tesla that much, right? I don't look at this chart. So let's just delete everything here and I'll draw it. Okay. So when you have and this is going to be a good example of like a weekly chart of the dollar. So you got the dollar that drops, right? Then it bounces, right? And it gets to a 38% retracement. It's where we're at right now, right? Okay. In order to get a good AB equals CD, you should reverse and head lower from here, right? That's what should happen. Like if the dollar strength is so strong, it should hold here start rolling over, and then we're going to eventually break new lows. That means stocks are probably going to go to all-time highs. Now, if we break above that 38% retracement, if you break above that 38% retracement, the chances of a dollar continuation become a lot less. So anybody who, and then, so hopefully let me, and we're obviously right here, right? If you zoom in on a weekly chart, we're like right there. That is where the, where the intersection happens. So if you go back to the dollar, let's go over to a 4-hour chart again, and let's go back to the dollar. And let's move that back over. So now we've got this wedge right into this really key 38% retracement. And just so you can see it, the 38% retracement is right there. It's that blue line right there, right? So now, I forget how I had that drawn, something like that. So now we're wedging right into key resistance, which my assumption is over the course of the next 36 hours, we're going to do something like this. I'm still drawing. Get some people short, get some of the longs freaked out. Potentially. That's what I envision happening over the course of the next 36 hours. Now, what could happen, and the reason why I'm keeping dollar longs is because we could do one of these too. And take out all the stops here ahead of the jobs report. Then what happens from here? What happens from here, or let's just say my other scenario, what happens from down here is really all due to the jobs. Now, why do I feel that the dollar, if it dips down like here, why do I think it's a good buy? Because I don't think the jobs report on Friday is going to change the picture. As I've told you guys the last 2 days, or this whole week, I guess that would be the last 2 days, right? We know what the Fed's going to do. We already know what the Fed's going to do. The Fed's going to be done with tapering by middle of next year. That means their pace is going to be about approximately 15 billion a month that they're tapering. That's what put the bid in the dollar anyway. The dollar, even if it's a weak day, if it's a weak piece of data, so we're expecting 500,000 jobs. Let's say we create 300,000 jobs or 250,000 jobs or 200,000 jobs. The dollar will come down, but it's going to bounce right after that, in my opinion. The only thing that would really make the dollar suffer, well, actually, let me rephrase that. I don't think the dollar is going to suffer much, even with weak data. I think it's going to bounce back because people will say, well, that's a one-off. And then you're going to hear all the, oh, it was miscalculated. It was there's a seasonal adjustment, blah, 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 whatever. People make up all sorts of narratives after the fact. Whatever the reason is, the dollar may come down, but it's going to bounce right back because the Fed already told us, the Fed chairman told us how he's going to taper and what the amount's going to be. The only thing that's going to alter that is if we start to see really bad jobs reports back to back. I think the only thing that would actually create some selling pressure in the dollar that's going to stick is a really bad number. Like let's say we lose jobs or we lost jobs in September. I don't think that's possible based on the data we've seen, but I don't know. Right. It's probably more of a crapshoot. So anyway, that's why I think you have to be looking at this 38% retracement is so big. It's so big. Like on Friday, if we close the week here, like we close the week up there, as I said on the Face webinar, I said it on Morning Edge today, you don't want to be short the dollar if that happens, right? You just don't. Because, you know, probably going to get some giddy up, right? But anyway, that's kind of how I feel about the dollar. I know I just spent a lot of time talking about the dollar, but look, it's bullish. I mean, we're, you know, knocking our head right up against resistance. Although I don't think the dollar is just going to start, you know, I don't think the dollar is going to just start ripping right now. You know, out of the blue, like just, you know, I don't think it's going to go anywhere, because I don't think stocks are going to go anywhere right now. I think stocks are consolidating. You look at the S&P, like I've mentioned on Twitter, and I've mentioned on the Face webinar, and I mentioned on the Morning Edge today. I think we're going to consolidate. I think this consolidation is going to lead to a dollar consolidation, right? That's how I feel about that. So, Guy, sorry, I just seen your comments, and you are partially correct. Dimitri said, on the other hand, taper is also priced in to some extent, or is it not? I think it is to an extent, because that's where we've seen the dollar move, right? We've already seen the dollar move. I think the bigger risk for the dollar, outside of like economic data, is the debt ceiling being raised, and all of the debt issues that we're dealing with the dollar right now. That's the bigger issue, I think, or I should say bigger issue. I think that's the other issue that's kind of like that unknown. So anyway, that's just kind of how I feel about the dollar right at this moment in time, and also how I feel about the S&P. I don't. There's not a lot more I wanted to talk about today, because I think we're going to be in limbo the next 2 days. Nick asked, what are some pullback areas to look for longs in the dollar? Is 93 out of the question? And what point does the dollar no longer look bullish? Thanks for your help, Blake. Nick, that's a good question. And I think that's exactly spot on, right? You start getting below, this is, I know I've drawn this out for you guys, but these are the levels where if you're long dollars, you really got to be probably not long dollars, right? Like if we get back below 93.50, but I don't think this is off limits the next 2 days. I don't think it's going to, but it could do one of those, right? But I think the 93.70, this level, is probably going to offer some pretty good, 75 rather. It's going to be some good levels for dollar longs, I think. One other thing. You know what? I'll talk to you guys about this, because you guys are my peeps. I am really keeping an eye on, and I don't think this is going to break down just yet, but I am really keeping an eye on this big Nikkei double top. That is that move right there. We get below here, this, let's just call it 26.7, 26.8, I guess. We get below that and we start breaking down, you probably want to be long yen in some way, shape, or form. Whether you're, looking at the euro yen as a breakdown, and this is one of those, if it breaks 128, that's when I'm, get really bearish. Guppy being short up here probably makes sense. I'm not short, by the way, but I think that makes sense. Aussie yen, this could end up being maybe more like that. I thought it was more symmetrical, but you can see we're rejecting that resistance, and I have to do a little bit of chart work here. I'm just not 100% convinced. Maybe it's like this. Yeah, maybe it looks something like that. Hard to say. New Zealand yen, I mean, that was a big rejection overnight. Canadian yen is what I'm focused on right now. I'm short Canadian yen. I sold some on this bounce today. I'm down 13 pips right now on my average. That's not full size yet, but as long as we stay below here, below that 618, because I think that crude oil, I think this was a little bit exaggerated, and I think we're done for now. And this is a daily chart. If we end the day, let's just say, if we end the day here, that's a bearish engulfing in crude, right? Or an outside day, however you want to look at it. Brian said, amazing how the Nikkei matches to the original breakout point. Yeah. Yeah, I mean, right there, you're talking about, and I look, if we see some sort of 15% correction, is it, or right down, just back down to some consolidation areas, if it plays out. Brian said the 23,000 launch. Oh, let's see here. You're talking about over here. Yeah. Kind of messy, but yeah, I agree. Anyway, I think that's doable. That's pretty doable. iFriend asks, did I add to my dollar Mexican peso? I did. I added back. I actually sold it all at like 78 and I added it back already. So, but you guys know my bias for the, oh, it's not on here anymore. That's right. My bias for the dollar Mex is bullish. That's irritating to me because that, oh, no. I closed that. That's right. I closed that early because I was in California. That's what happened. Yeah, well, but yes, I am playing it on the long side again. All right, guys. Well, hey, I want to say thanks for your support. Thanks for being here as always. And if I don't see you in the chat room, I'll see you tomorrow morning on Face. I hope you guys have a wonderful remainder of your day and a wonderful evening. I'm going to go see my mom tonight. It's exciting. All right. Talk to you guys soon.